The stock market is booming and you definitely don't want to miss out. Unless you've been under a rock, you should have heard about the deal struck between the US and China. Now, I think the headlines and the news reports are getting a little ahead of themselves saying deal. Deal sounds a little premature. Because these were just talks, okay? These were the beginning of negotiations, and these were talks to pretty much set the stage for further negotiations. And so there were basically some concessions made on both sides, and so, we should just clarify that. Was this a trade deal? Was this the trade deal that everybody's looking for? No, I don't think that's what that was. I think it's pretty obvious that that's not what this was, but this was talks over the weekend between our Treasury Secretary and the China diplomat to basically set the stage for the negotiations to come, which they're going to set the date. So that's unknown right now. They'll be setting the date and the place to meet. But right now, some concessions were made on both sides. An agreement was made on both sides. It seems to be mutual based off of the reports that's coming, from the US as well as from China. One of the things that was agreed to by both sides, United States and China, was a reduction of the tariffs by 115%. And so that places both countries' tariffs currently at a baseline of 10%. So the US has a 10% tariff on, China has a 10% tariff on, which is very significant. As you remember, the US had a 145% tariff. China had 125% tariff. So, these tariffs is what led to what everybody was saying was an embargo, right? When the tariffs are so high that there's no way for any trade to be conducted because nobody's gonna pay that kind of tax. And so when you have a situation like that, no trade is being conducted. That's what's considered a trade embargo. And so to go from 145% down to a baseline of 10%, which, by the way, is the best case scenario for any country negotiating a new trade deal with the United States. Okay? 10% is the baseline. That's the best you can get. So to go from 145% tariffs to 10% is crazy. It's crazy. It's big time. It's big time. And so now also the tariff on fentanyl is still in place. So the fentanyl related products tariff is in place, which was 20%. And so that gives you a combined tariff from the United States of 30%, the baseline 10%, which was agreed on, and then the 20%, which remain for the fentanyl products, is now a total United States tariff on China of 30%, which will remain during the 90-day pause. So this is very big news, guys, and you definitely want to be paying attention because the impact that these negotiations is going to have on your life directly is profound. And so you definitely want to be paying attention. You definitely want to do your own research, your homework, and know what's going on. And so as you see, the announcement of the negotiations sent the stock market skyrocketing with historic gains. The S&P closed at 58.44.19, up 3.6% in one day, which is huge. That's being up 184 points to close. okay? You know, these kind of gains within a day are rare in these markets. And so, you know, guys, that's why you want to be paying attention to this stuff that's going on, because you want to be positioned, all right? We're going to be positioned properly, you know, for whatever happens, right? For whatever happens. You want to be set up whether the market goes up. You want to have yourself ready and be set if the market goes down. And so now what you're starting to see is a lot of positive, bullish sentiment coming from the analysts, coming from the pundits, coming from the executive staffs of some of these companies. Now everybody's getting positive. Everybody's getting a better outlook. And, you know, it's warranted, right? Because no one knew what the outcome of these talks over the weekend were going to be when the Treasury Secretary Scott Bessent went and met with the Chinese diplomats over in Switzerland. So no one knew what the outcome was going to be. And so once you get a scenario like that, you know, with this drastic reduction in tariffs, man, that's a big de-escalation. And so de-escalation like that is obviously going to lead to an outcome. And we're seeing that today with the markets rally. And so now you have people like Mike Wilson, who is the chief investment officer at Morgan Stanley, coming out and saying, you know, they're expecting a 6,500 S&P by the end of the year. Just think about how crazy that sounds, where just a week ago, you know, all you heard was doom and gloom, fear, uncertainty, and doubt, you know, coming off of all these programs, coming from all these insiders, coming from all these analysts. You know, all you was hearing was FUD, you know, but hey, we wasn't FUDding because we knew what we was looking at when we were looking at the price action, when we were doing our technical analysis, when we seen that the market had clearly bottomed back at the first week of April. And we knew that the buyers were coming in. We knew that the institutions were buying. All the while, the media was spreading FUD. So we seen it coming. And that's why we properly position ourselves for this very moment. And so you got Apple rallied, closed around 210, a little over 210, up 6.1%. Amazon closed at 208.64, up 8%. Meta closing close to 640, up 8%. Tesla closing at, what, 318.40, up close to 7%. I mean, you practically could have just went eeny, meeny, miny, mo and been up in the market today. But at this point, you know, what you don't want to do is get caught up in greed, okay? You don't want to get caught up in FOMO, all right? So, you know, you have the opposite ends of the spectrum. You have fear and greed, and you also have FUD and FOMO. FUD is fear, uncertainty, and doubt. FOMO is fear of missing out. And so you don't want to get caught up in that with a lot of these stocks and a lot of these equities and assets that are running right now. So, you know, you want to obviously do your technical analysis with your candles, with your opening, your close, your high, your low, price action, and you want to get in on a good pullback, okay? You want to wait and be patient and wait for a nice retracement, and then look to get into some of these positions if you want to go long. Now, aside from the US-China trade negotiations, you got a lot of other things going on as well right now, y'all. So a lot of moving parts going on to the global sentiment and outlook, you know, of these different situations. And obviously the markets, you had Zelensky and Putin have agreed to meet face to face, first time, you know, since the war has started. And so they've agreed to meet in Istanbul. So that's going to be interesting. I'm not sure if they set a date, but you know, that's a really big part of the geopolitical situation, you know, and so everyone is looking for a peace deal to be struck there. So we'll be paying attention to that. Also, you have India and Pakistan agreeing to a ceasefire. So that's really big there, you know, because war, when it comes to outlook, when it comes to being able to be forward looking and certain that, you know, there's going to be peace and prosperity, well, war hinders all that. And so, you know, it was definitely a wonderful thing, a great thing that those the leaders of those two countries were able to, you know, come to an agreement, come to a ceasefire, and hopefully they can work out the differences and you know, implement some things moving forward. In the meantime, us as productive consumers, hey, we're just gonna do what we do. We're gonna rinse and repeat the process. All right, we're gonna generate income. Okay, we're gonna keep our income higher than our expenses by keeping a tight budget. All right, and as we keep that tight budget, the income that we have left over at the end of the week, at the end of every 2 weeks, at the end of the month, whenever you get paid, we're gonna take that income and we're gonna put it to work. We're gonna make the money work for us instead of us constantly having to work for the money. And so that's how we're gonna reach our goal of financial freedom, financial independence, is by taking that income, that investment opportunity that we identified through budgeting, and we're gonna put it in the market. And so we've identified some wonderful plays. All right, do your due diligence, okay? Do your homework, fundamental analysis, do your technical analysis on the price action, and then go from there. Not financial advice at all right? Because we all trying to do the same thing. So let me know what y'all think, man, about these chain of events. You know, are y'all bullish on the market right now? Are y'all positive on the geopolitical circumstances, situation of how it's unfolding? Drop a comment, let me know what you think, and I'll see y'all on the next one. Peace.